thank everyone for attending this event. So to start with, I'm going to share my screen and we're going to walk through a corporate presentation we put together for you, and I'll explain what we're doing and how we're moving forward. As I mentioned, we're Red Pine Exploration, and this is what we would call an investor update. A few things to keep in mind. This company, the project is 100% owned, so we own many of the surface rights, the mining rights, and even the logging rights on this property. Currently, we're well financed with over $6.5 million in the bank, and we have 2 drills turning, looking to expand the existing resources that are on the project. One of the things that's very important to recognize about us is not only excellent infrastructure, but where we're located in Ontario. We do have currently 3 producing gold mines that are within 40 kilometers of our property. So it's not just we're in the right neighborhood, but there are people vying for our land position. That is called the Michipicoten Greenstone Belt. This is our current capital structure. Of note is Alamos Gold owns a large portion of us. As I mentioned previously, we have a number of producers around us, and the largest of those is Alamos Gold. They currently have the highest grade and lowest cost producing mine in Canada. So they're making quite a bit of money, and their stock is doing very, very well. We also have a number of corporate investments. One would be Merck, which is a large American fund, Royal Bank of Canada, Mackenzie, and we do have research both by Haywood, which is a Canadian investment bank, and Laurentian Securities, which is also a Canadian investment bank. So they do have coverage on us. Total share structure at the moment, total fully diluted that's outstanding with shares and options, 192 million shares. And as I mentioned, currently right now, just over $6.5 million in cash. Where we're located, as we mentioned, it's in Ontario. We're not very far north, actually, for Ontario, or for Canada for that matter. We're 2 hours north of the American border in Sault Ste. Marie, and we are surrounded by a number of producers and past producers. A lot of people are very familiar with the Timmins Gold Camp. It's producing gold for over 100 years. Actually, the Michipicoten Greenstone Belt in the area of Wawa was one of the first gold rushes in Ontario. Our property has seen production since the 1800s, late 1800s, on and off during those times, and most of it fairly artisanal or small production scenarios. But our property does host over 10 past producing mines. And as Gilbert pointed out, there has been significant investment in this region in Ontario. Again, where we're located, this is the community of Wawa, Ontario. You can see right here. So access to infrastructure is excellent. We have the Trans-Canada Highway, an airport, major power lines, runway, highway to Timmins. And this is a footprint of our current property. The shading in the darker colored here is the land position where we have the surface and mining rights already. And as you can see, there are a number of past historical operations that have occurred on this property, starting, as I mentioned, in about the 1880s, and the last production on the site would have been 1980-81. This is, however, is the first time one company has consolidated this whole land package under one company. So that's a big deal. Currently, we have defined 2 resources on the project. One we call the Saluga mineral resource, and the other we call the Minto Mine South. The Saluga, which is shown here, is the largest of the 2. It's approximately 600,000 ounces, just over 5 grams per ton. And then we have the Minto Mine South, which is higher grade, but approximately 100,000 ounces. Both these deposits are open along strike, down dip, down plunge. They're wide open. And one of the things that we focused our exploration on over the last 2 years was proving that we can expand these resources, not only down depth and down plunge, but potentially in grade. So this is our starting point. This year we announced that we had revisited how we were going to look at future resources going forward. One of the ideas we've come to consider, brought to us by our partner on the property. This would be followed up with an underground scenario. So we came up with some guidance here. This was back in March. With metal content of approximately 1.2 to 1.6 million ounces, with a grade ranging of 1.8 to 2 grams per ton. So we've set that as an exploration target, and this is the objective we're working towards. We're hoping to have the new resource out by Q2 or Q3 of 2004. This would be a significant change in the current resources. As you may recall a few slides earlier, we're at 700,000 ounces. This would have essentially more than double that. Our results over the last 2 years in our current exploration program have been proving that the idea of this pit model and higher grade material are, better than a potential at the Wawa Gold Project. We're actually intersecting excellent grades and at good thicknesses. This is a plan map of the project. Currently, the two resources are hosted in two structures. One we call the Jubilee structure, and the other we call the Minto Mine South structure, which is right here. We've been drilling in the footwall and the hanging wall of the Jubilee structure to infill that gap in information that we had around the open pit, and we've had some excellent results. So these are grades over thicknesses, so 6 grams over 2.7, but 2.68 grams over 25 meters, 38 grams over 0.9, 10 over 28 meters. These are big intersections, and these all work for that open pit sort of starting model that we've come up with. And one of the interesting things is they're starting to hold together. So this would be an outline of the conceptual pit centered around the existing resource that we have at the moment. And you can see that we're hitting mineralization within the hanging wall of significant grades and thicknesses that will add significant ounces, or potentially add significant ounces, to our new resource. What we have right now in that conceptual pit model is drawn here. So this is a cross section. This is that plan map again. This is the Jubilee Shear. The Jubilee Sluga resource is hosted within the Jubilee Shear. And, if we draw a pit outline like we theorized, right now we would have approximately 1.15 million ounces. And the reason that is we've changed our cutoff grade from an underground operation to an open pit. So we've gone from just over 2.5 gram cutoff to a 0.5 gram cutoff. So immediately the number of ounces within the pit increases. However, this pit does not include anything at the moment that would sit in this area here, and that is what we call the hanging wall. What we do know is we've been intersecting great grades and long intersections of gold within this hanging wall. So as I mentioned before, the Minto B horizon, those where we're seeing those great thicknesses of gold mineralization above a cutoff of 0.5 grams per ton. And when the idea is to now infill this so that we can change the strip ratio on this project and advance it and get the number of ounces up. That does not mean that that's where we're going to stop. So if we look at that same cross section, we're seeing that there is a potential to expand this pit to include other structures on the property that we know are gold bearing or have had past producing mines on them. So what you're looking at here is just sort of a conception, and we've also press released this, that the open pit target itself, so the shallow open pit within the upper 200, 250 meters, could easily contain up to 3 million ounces of gold. So that's pretty exciting, and that's something what we'll be working towards after we put out the new resource statement in Q2 or Q3 of next year. So one of the big things about Canada or any operation when we look around the world is we need to make sure that we have buy-in by our neighbors. And who are our neighbors? They're the First Nations communities, they're the town, they're the province, they're the federal government. And there's ways that we can do that, we promote that and make sure that we're not doing anything that's too surprising to the local members of the community. Wawa has always been a mining community. And as I mentioned, it's been involved in mining since 1880s till today, with three producing gold mines currently serviced by the community. So we do have our permitting in place. We do have strong community support for this, but both at the provincial and local levels. And we do have a great relationship with our First Nation neighbors. So we have exploration agreements with three of those that are involved in this part of the province. This is our management and staff. One of the things I would suggest when you're investing in any junior exploration company is you look at who's running this and a bit about their history. Myself, as mentioned, I have more than 25 years in exploration activity within Canada and abroad. My VP of Exploration, or our VP of Exploration, holds his PhD not only in geology but also in engineering. Very bright man, came highly recommended out of the Government Survey of Canada. Eric is our CFO, and Carrie's the Director of Corporate Communications, and she helps with marketing and setting up events like this. One of the things you will see, I think, in the past is board of directors that are very tight to our CEO. I can tell you currently that none of these people are my relatives or my friends. In fact, this is a very independent board. Someone to point out very special, in my opinion, is Paul Martin, who is currently the CEO of Osisko Royalties. However, prior to that, when he joined our board, he was the CEO of Detour Gold Mine. Detour Gold Mine was currently acquired, and it is the largest producing gold mine in Canada, currently with over 10 million ounces in reserves. So he was running that. This was the first position he took after leaving Detour Gold, so I asked him to join the board. We also have Andrew Bowman. He came from Barrick Gold. Barrick went through consolidation 2 or 3 years ago. Again, the first board Andrew has been sitting on. He worked in our jurisdiction at the Hemlo Gold Mine, which if you follow gold in Canada, you would be familiar with. Another great success story, but he ran those operations for 25 years. So he's a great asset to our board. Drew is also a mining engineer that is currently working on some other projects in Ontario, but I met him when he was at Detour because he was in charge of the operations of the Detour Gold Mine with Paul Martin. And Rachel brings to us all the institutional sales and marketing experience. She comes from that side of the business. So we're a very strong, independent board. And in summary, here's our connections, contact information, and things like that. I think our focus, as I mentioned, will be moving forward with a new resource, again, in Q2 or Q3. Over the next little while, we will have continuous press releases with results. If you noticed, there was a press release out today that the market is responding well with. Red Pine seems to be gaining some traction in the market. If you look at our stock price, it has been gradually increasing, which I think is a good way for it to go. And we look forward to sending out and promoting additional resource or new resource as it comes out. And also we'll be having continuous press releases on results as we become available to us over the next 6 to 8 months before the resource statement. So with that, I will open it up to questioning.
Thank you, Quentin. There's a few questions here from the audience. The first one from Carl. He's asking, what's your exit strategy? Was it trying to be acquired by the majors?
Oh, for sure. I mean, we have never really hidden that. Our idea, and it's, I'm going to wave my arms a bit, but our idea was to wrap this up in a nice bow, meaning that, so the things that we do have going forward for us, this is a brownfield, meaning that we don't need permits to do a lot of things. It also means it can move quicker into production. We already have the mining and surface rights in place. We've got our ESG reporting done. We're environmental compliance. We've been recording data over the last, well, since the 80s. So again, we can show this can be moved quickly to production. So the exit strategy for Red Pine is to de-risk this project as far as possible. There's no doubt there's gold here. And then hopefully one of the producers that are within eyesight of us will have great interest. Obviously, the leader in that race right now would be Alamos, who has invested in Red Pine significantly.
Sure. The next one from Gavin is asking what's the main catalyst in the upcoming 6 months for your company?
Yeah, that would be the new resource statement. As I mentioned, right now we have approximately 700,000 ounces, and I would say that's a fairly outdated resource based on the information we have now. So that would be the major catalyst coming out would be the new resource statement. But prior to that will be press releases on the results of our drilling moving forward.
Another question from Paul is asking about how you're gonna probably talk about environmental issue, for ESG, how do you balance out the environmental consideration and the exploration portion. So maybe you can elaborate a bit on that.
Yeah, I mean, it's something that we need to be aware of for sure. One of the things with this is a brownfield. And all a brownfield means is this has seen production. This property has seen gold production in the past, from the 1800s through to, as I mentioned, the late 1980s. What that does is just for us, it makes it a little easier to get permits because this thing is already under what we call a closure plan in Ontario. So this is not a greenfield. It's not a pristine area. I mean, it's very clean for something that's seen production in the past. But the local community, the First Nations, the province, they all recognize that this property has been worked in the past. So not that we get any great leeway to do things wrong because of that, but it does make permitting simpler than if this was a pristine setting.
Good to know. There's one question coming from Phil. Is asking how are the neighbors in the area in that region? What other projects are sort of active and going on? And maybe you can tell us more if you sort of.
So the three big, the three major producers in the area are Alamos Gold Incorporated, Angus Gold, who has just gone into production, and what's the other one? Weststone. All three of those mines are quite high-grade producers, for sure. Argonaut has just gone into production, so they've spent, north of, I think their costs were just over $2 billion to go into production. Alamos bought their project for just 1.2 billion Canadian dollars about 4 years ago. So there is investment and interest in this camp. So the three producers around us, I'm sure, are paying attention to what we're doing. And hopefully this project gets large enough that it might even allow for, somebody to come in and you have this as a standalone project.
Sure. Next one, so similar to before, but who's asking you, you've got two major projects. Which one will possibly become a mine soon or later?
Well, we can't predict that. The resources that, as I mentioned, we have two resources. Those will be combined into one moving forward. Okay, they will be joined together into one. Timeline production, I don't think will be our decision-making process. As we've mentioned earlier, our idea and plan for this is to de-risk it enough that it becomes an attractive acquisition for a producer. We are not producers at Red Pine. We're exploration people. That's our focus. That's what we're good at. We're not, there would have to be a serious change in management and stuff like that if this was to go into production under Red Pine.
Sure. One last question here before we go. Gray's asking you about the cash position capital. Do you need to raise further capital anytime soon? What sort of situation there?
Well, as I mentioned, we have approximately $6.5 million in the bank. We're an exploration company. We do not make money. I mean, so we spend money, and hopefully the money we spend results in good returns for our clients, and people like you would be our clients, our shareholders. If there's an opportunity where we think that the funds that we're raising are at a good value for the existing shareholders or for the company, because we have to assess a number of things. Are we going to spend the money? Yes, we know what we have a plan to do. Is the pricing attractive compared to our stock price? Maybe. In the future, are there going to be funds available? We don't know. So there's a lot of things that go into that decision at the management level, whether we should finance or not. But the simple answer is yes. Exploration companies always have to finance.
Thank you, Quentin, for that really important facts out of the door. But thank you for sharing your story with us and answering all the questions from the audience today.
No problem. And thank you, everyone. Thank you, Gilbert. Have a good day.
Thank you.